New Year. Welcome you joining today's class, Saver at Home and Learn 2021 Lending Updates. I'm Pauline Lam, your 2021 Co-Chair Education Committee. Before the meeting starts, I would like to remind you all participants will be muted, and should you have any questions, please enter it into the chat box. Sylvia will help to address the question and speaker will answer it during the Q&A section. This meeting is being recorded and will be available online on the YouTube channel West and Gabriel Valley Realtors. Now, I would like to hand over the floor to our beautiful Sylvia Rosich, 2021 Co-Vice Chair Education Committee, to introduce you our speaker, Cosmo Sanchez. Thank you, Sylvia.
Thank you, Pauline. Good morning, everyone, and welcome to our first 2021 Safer at Home and Learn updates. Okay, today we're having lending updates. We have with us Cosmo Sanchez from New Aim Funding. You all read his information, and he's here for you. He's going to give us more information about where we stand in the lending world. Welcome, Cosmo. It's all yours.
Hello, everyone. Thank you, Sylvia, for that introduction. Great to be with you all today. So instead of boring you guys with all the technicalities of lending, I want to make this really straightforward. I want to make it interactive, right? So I want to talk about some programs that you guys already know of, right? And talk about those programs, where were they at during COVID-19 and where they're at now, and what can we expect and what have you. So I want to start off with talking about FHA. Now, and I want you guys to type in, do you remember a program called 80/20? And I want to, if you could type in yes, if you remember that program, just type in yes. I want to get a feel of how many people remember that program. Okay, I got a no. Let's see. No. Yes, okay, Pauline, yes. Very good, yes. No, okay. Awesome. So what's 80/20, right? What does that even mean, right? It's FHA. So think about 100% of something. 80% it's the first loan, the 20% is the second loan. So what that means is that we have a program where your buyers could qualify for a home with zero down, the 80/20 program. This was a loan that was back in the days and now it's back. So what does this loan look like? Just like a regular FHA. You could have a FICO score from 640 up. Pricing for this loan is going to be around 3.275 all the way low as 2.99. And so the good news about today's market and the interest rates, as we go along, you're going to see pricing hasn't changed really, right? Pricing has just been getting better and better. Actually not getting better, it's just been holding. And so that's amazing. Now that contributed to what? To the market being so hot right now. Last year, after we started getting back into the swing of things during COVID. So we understand that now you have a program that you could help your clients qualify with zero down. That 3.5% is essentially the 20%. So what they will have to pay from there is the closing costs. We also have down payment programs that could cover the closing costs and the down payment, and that's Cal HAFA. And all the stuff that I'm telling you guys, just write it down. I don't have a PowerPoint to share with you. I will give you my information so you could call me directly. But these programs I'm mentioning to you, the 80/20 FHA, Cal HAFA, these are all programs that you could literally Google, right? You could go on internet, you could Google, and you could also talk to your lenders about that. So let's talk a little bit about conventional. Well, conventional during the COVID, when it was really hot and steamy, right? When COVID was hitting us really hard, I mean, you had to have reserves for some of your deals, right? And some banks and some lenders were not even doing conventional loans. So you guys know that because you work with a lot of the big banks, some of you. But people who are independent were pretty much, able to do them. I was still able to do them, right? And then they started giving us overlays, right? So one overlay that they added was, hey, some of your clients, based on the loan amount and their FICO score, they're going to have reserves of either 3 months or 6 months. So I'm happy to say right now, we don't have that overlay right now. Now, again, you're gonna have to check with your lender about maybe you guys still have it, right? With whatever conventional loan you guys are doing. But I see someone here say still hitting us worse. Right, it is still hitting us worse, but it got a lot better. So that overlay of the 3 to 6 months, gone. I also want to talk a little bit about appraisals. So appraisals, right now, you guys have noticed a lot of appraisals, you're getting appraisal waivers. You're getting them for refinances and you're getting them for purchases. And FHFA recently announced last week that they're going to continue using the method of going on the MLS, of going into the records, and also seeing properties in the area that are already appraised for a certain amount of money, right? So that means that your clients will get free appraisals. And the reason why is because of COVID, right? People don't want to get sick and they want to make it as easy as possible. Now, can that bite you in the butt? Yes, it can. Because in some cases where you guys are going to need the appraisal to be at value because of whatever factor it may be, right? And we all know that getting on value is really important, and especially for some deals. In those cases, we could order an appraisal in order for that to happen. Now, jumbo loans. When COVID hit, jumbo loans were for a while completely gone, right? They just were not lending when it came to that. Jumbo loans are back. FICO scores for jumbo loans could be as low as 680. You're looking at as possible 10, 15, 20% down as far as down. And the other good thing about that to know is that working with me, I could do this deal for you guys, right? Some of you guys, lenders, are not touching jumbo right now still. Some of them are going to require for your clients to have a 720 FICO score or above. And so be interested to see where we're at as time progresses. But what I want to do now is kind of just open it up for a little bit of interaction, right? Is there any questions that you guys may have in regards to some of these programs I'm mentioning right now?
Yeah, Cosmo, this is Mary Scott.
Hi, Mary.
Hi, I was just curious, are you able to do all of these programs that you're talking about, or only some? Because I was wondering if you're a direct lender that's able to do all of them, or you're a broker able to do all of them.
So I'm a broker that's able to do all of them. And so,
thank you.
Yeah, whatever when it comes down to also non-traditional lending, right? And so, okay, let's see, Jim's right here saying 80-20 sounds like a winner. Do tell me more. Okay. Okay, so basically, what's a FHA deal, right? FHA deal is 96.5, and the other part is what? 3.5%. You guys remember that, right? When you're talking to your clients, you tell them, hey, in order for you guys to do a government loan, which is awesome for some clients, why is it awesome? Because you can either buy a single family or you could go up to 4 units. That's why a lot of people like FHA, right? Not only that, but FHA is willing to work with people with FICO scores that are really low. Is conventional willing to do that? Not really. Conventional is a lot more strict when it comes to FICO scores, right? So some of your clients have to go FHA in order for the deal to work. Example, if your client has a FICO score that's, let's just say 550, we have investors that are willing to do that deal at 550 FICO score. Of course, if their FICO score is higher, well, then better for us, right? Now, the 3.5 is at 20%, basically, and that's the down. So that's when it comes back to the financing, they're financing that total. Do you guys, am I explaining this clear enough for you, or do you guys have any questions in regards to the 80-20?
Did you say the 80-20 is an FHA loan or a
It's an FHA loan that covers your down payment. As simple as that. Just remember that. The 80-20 covers your down payment.
So that's different than the 96.5 and the 3.5 down required, correct?
Exactly. Yeah.
So, okay. Thank you.
So that's it. What you will pay for that is that you will pay the closing costs. So now for some of your clients who, this is Cal Hoffa, right? That's able to help your clients that cannot afford the closing costs. Cal Hoffa pays two things. They pay the down payment and the closing costs. So now we're talking about your client potentially coming out of pocket with $0. So that's another popular loan. And these loans are different because they vary. Cal Hoffa also exists for conventional. So some of your clients could either go FHA, Cal Hoffa, or they could go conventional, Cal Hoffa, depending again on the loan amount and the FICO score. We are going to either advise the client to, hey, it's better for you to go FHA, or it's better for you to go Cal Hoffa. So that's a great program for you guys who work with your for your clients who really don't have money saved up to buy a property, right? So that's a great program.
Cosmo,
Go ahead.
another question, excuse me. You mentioned the Cal Hoffa. Is your brokerage able to do those loans, those Cal Hoffa loans?
Yeah, we do the loan. Yeah, exactly. We're able to do those loans.
Okay. Okay, thank
So
you.
the way that works, and what's your name? Who's asking these
Mary
questions?
Scott.
Mary.
Mary.
Okay, Mary. Thank you. So Mary, so basically you have to be certified as a lender to do a Cal Hoffa loan, right? So then
That's what that's what I was referring to.
exactly. In my case, Cosmo Sanchez, I'm certified. I could do, not only am I certified, but my brokerage is certified, right? So when
Perfect.
your loan comes in, your client comes in, we're the one who, with the certification, make it impossible for you to be able to get that loan
Perfect.
for the
Thank you,
client.
Cosmo.
You got it.
Good afternoon, Cosmo. I have a couple of questions. This is Tina Lee here.
Hello, Tina.
Hi. Are you guys doing the loan across the states, or are you only doing California?
We do some loans across the states. Some of the states that we work with is Nevada, Texas, Arizona, and other states that you may come across that I'm not sure 100% on. I would just have to check and get back to you and verify.
Okay. All right. Question number 2, when it comes to FHA, do they have a very strict inspection on the condition of the house in order to prove the buyer's loan?
Right. So the good thing is that a lot of our appraisals are getting waived right now. Now, FHA conventional, when you're out in the market, sometimes you're going to have some scenarios where you're going to be better off going conventional, right? Because they are stricter than FHA are stricter than conventional. What I mean by that is that I'll give you an example. Say there's some peeling outside of the house, right, on the panels. Say there's some paint chipping. FHA require for you to paint that. Or say the fence looks like it needs some repair, or the garage door looks like there's some rotten wood, FHA is going to require you to fix that. Now, what people get mixed up on is what is really important for realtors like you to understand is that the property in the end of the day has to be what? Livable, right? So just remember that. So the property has some clients that say, hey, Cosmo, let's do conventional here. And then conventional, we get appraisal and we come into some issues. And I'm just saying, hey, if there's like a part of the kitchen that's not done on the floor, like literally like some of the floor panel is not there, that's not livable. And even conventional is not going to allow that to pass. Does that answer your question?
Yes, very much. Thank you. I have an additional question. Do you guys also do USDA or VA?
Yes, we do. Yep. Just government sponsored loans. Yep. We do them as well. All
right, great. So if you could get back to me on whether you can do loans in Ohio, that would be great.
Yeah. Okay. Ohio. Perfect. Thank you. And your name again is what?
Tina Lee. I'll type in my number.
Okay.
Yeah.
Perfect. Please.
Thanks.
Okay.
Cosmo, this is Mary. I have another question. The market's really hot right now, which is exactly what you said. And a lot of the properties, the listings are getting multiple offers, and a lot of them higher than the asking price and the listed price. So if it's my understanding that on an FHA loan, the buyer cannot bring in additional money if it can only go up to the appraised value, that it cannot bring additional money. Say if you want to offer an extra $10,000 to kind of win out the other buyers. Do you know what I mean?
Correct. So basically, can you finance, right, that extra 10 or maybe even 20,000, right? That some sellers may need in order for you to buy that property, correct? Is that what you're asking?
I'm not exactly sure about financing the extra money above the appraisal, but that's actually a very good question. I'm just wondering about the buyer, if they can wiggle out an extra $10,000, is that even allowed by the lender?
Yeah, of course, right? So let's just make it a real nice scenario, right? Let's say a property is selling for 500,000, right?
Yeah.
And let's say they do the appraisal and the property appraises for 490,000.
Okay,
Now, and for just to keep it simple, let's say that the appraisal is short $10,000.
correct.
The bank, the lenders, and this is across the board, right? Doesn't matter if you're with Bank of America, direct lender, or a broker like me, right? This is across the board. You're missing $10,000 of that, right?
Right.
All of us are only going to finance what it appraised for, which is the 490. So basically, in order for that deal to work, either the seller's going to have to drop the price, one, or you guys are going to have to go in on your commission, or the client is going to have to come up with that extra $10,000, right? So in that scenario, what do you do, right? Well, those were the three things that I told you already. But let me go back to what you're saying, Mary, because you're saying, well, hey, I'll buy if it's over asking. So I just want to first of all clarify that, though, right? Because that's really important, and that happens a lot of times, right? Appraisal doesn't come in, and then we got to start getting creative, right, on how we make the deal work. So that's one aspect of it. The other aspect of it is like, say, hey, it is going to appraise for 510 or 520, and let's just say that it appraises over. The bank is not going to be able to basically offer more on behalf of the client, right? So basically, the client is either going to have to come up with that more, because remember, it's all in the contract that you guys write on, right? If you write a contract at 500,000 and it appraises at 500,000, we can't come in to help you win your offer and just say, hey, we're going to add an extra $10,000 to this loan to beat out this other buyer. We can't do that. Does that make sense?
Yeah, absolutely. Yeah,
Okay.
that makes a lot of sense.
But Mary, so
But-
I want to finish my point on that real quick. I was going to make this comment, but this is really important. Some of you guys already have lenders, which is great. You're working closely with them. You get along with them. You like them. Everything's awesome, right? Every time you make an offer on a property, remember always to CC your lender and make sure your lender gets involved, especially, Mary, in situations like that where you're competing, right? Because a call from me to the listing agent, really quick call, easy, simple call. Hey, I'm Cosmo Sanchez. I just want to affirm that the client is ready to go. And if you have a proof for me, right? I'm going to say, hey, proof of funds, DU. What else do you need in order for us to accept this deal? And I'm just going to talk with them, going back and forth. You will be so surprised at how far that goes. Some lenders don't do that. Some lenders do, though, and credit to them, right? But that's going to be a big part of you guys getting your offer accepted in this competitive market.
Thank you. That's a great tip. Great tip. But getting back to the additional money when you're making an offer above the asking or even above the appraisal amount, can that source of that money come from anywhere? A gift from as long as the buyer has that extra $10,000, will FHA, for example, allow them to bring that extra money? I know that the funding, the financing is only going to be up to the appraised value. But if the buyer has that extra money, will FHA allow that to happen?
Absolutely. FHA and conventional will allow that. Gift of funds is what we call it, right? Now, the one program that's not going to allow you to allow that, do you guys, anybody know? Does anybody want to type it in? One program, very popular, you guys use it a lot, that does not allow you to use gift funds. What program is that? VA allows you. Government-backed loan allows you. Jumbo will not allow you to use gift funds, because the way Jumbo works is basically, hey, you're making good enough money to buy $1 million property, right? Or almost $1 million property, right? So basically that's it, right? But so what do we do with that, situations like that? Well, as long as the money is seasoned, we're good, right? As long as the money is seasoned and that's it. But to answer your question, Mary, yes, that is allowed. FHA conventional all day, easy.
Thank you.
When it gets to jumbo, it gets a little complicated, right? That's when we talk a little bit more about how we're going to be able to manage that. But everything's doable. Everything's definitely doable.
Hey, Cosmo, real quick. You
ahead.
mentioned the jumbo loan. I typed in my questions in the chat. It says, what's the interest rate on jumbo loan for 15, 30 years? Can you just shep on that real quick?
Interest rate's going to be a little higher than conventional and FHA. So right now, where is the interest rate for conventional and FHA? Let's talk about that real quick. It's around 2.99, guys, for conventional and FHA, which is awesome. Okay, where's the interest rate right now for jumbo? 3.5 all the way up to 4, depending on the FICO score, loan amount, what have you, how much they're putting down.
So last question for me. Do you do any type of loans based on job offer letter?
You're saying, say that again?
You
I'm sorry,
currently have
Tina?
a client who want to buy, but he just got a new job and then there's a job offer letter. He doesn't have any W-2 incomes or any tax. So does any of the program fits in his scenario?
Right, so he has a job offer, you're saying, a letter, right? That's, for example, his name is John. So it's like, hey, John, congratulations to the company, and
Yeah,
right? Something
and
like that.
we're, accept you to our company, he's nurse, so is hospital.
Okay, perfect. Now, do you know, are they going to pay him eventually in pay stub and W-2? Do you know that?
Oh, yeah.
Fine, completely fine.
So you can do loans based on job letter.
You could do FHA, you could do conventional. Yep. You can
Okay.
even do jumbo. Yeah. And the reason why, that's a great point that you're bringing up, Tina. It's Tina, right? I'm sorry. Yeah, it's Tina.
Yes,
Okay.
Tina.
And the reason why that's a great point that you're bringing up is it leads us into our self-employed people, which is more complicated, right? Why is W-2 and pay stub so easy? Well, because the bank looks at that as stable. Hey, you're there, you're working for a company. You're working for a company. This is not your company. And so the risk factor just diminishes big time when you're actually working for a company, right? Now, the people who are self-employed, one of the programs that okay, self-employed people, let's do this. What's the problem with qualifying self-employed people? What you guys experience? Let's hear a couple thoughts or comments.
They don't actually report all their income when doing their taxes.
Exactly. I like that, Mary. So basically, hey, Cosmo, I make $500,000 a year. I look at your taxes, you make $100,000 a year, but yet you want to qualify for $1 million property. Making $100,000 a year does not qualify you for $1 million property, right? Exactly. And the reason why they do that is why? They don't want to pay a lot of what? Taxes, right? So we get into a very important word. Remember this word, guys, cash flow. If we could prove that they got cash flow, we could qualify them. And how do we do that? Have you guys heard about the bank statement program? Bank statement program basically looks at their cash flow like a pay stub, like a W-2, and we basically verify from there how much they qualify for. So got it. That's one program that they could use to qualify for a property. How does that work? Okay, it's going to be either 3 months or 12 months, 24 months actually. We accept 24 months. And why is it so much, right? Why you say 3, but why you say 24? Well, because some companies have better months, right? And some companies didn't do well in the last 12 months, but they did pretty well in the last 6 months. So basically, we're trying to paint a picture of them doing well so that we could get them qualified. Now, what are the FICO score for a program like that? 680. You're going to have a FICO score of 680 minimum in order for that to work, which usually it's not really hard for a lot of them to obtain, especially if they're savvy, right? Because they know how to use credit cards. They know how to move their money. And that's us, right? I'm self-employed. You guys are self-employed where you guys do your taxes. So we understand that. Is there a question in the comments? Let's see. Bank statement, jumbo shrimp. Okay, bank statement program. All right, so we talked about that. Also, the foreigner program, right? Some of your clients come over and they don't have a social security, but they have a visa. Awesome, that's one way we're going to qualify them. So they don't have to have a social security, but they do have to file their taxes. We qualify them based on them filing their taxes, their tax paying participants, right? Based off of those taxes, we qualify them. Now, does that work? Can they qualify for FHA or conventional? No, they have to use the I-10 program. What does that look like? Well, you're gonna have to put down 10 to 20% down. FICO score, the same again, 680. That's what you're looking for. So I'm saying all this to you guys, and this is a lot that you already know, let's be honest, right? And this is the reason why I kind of wanted to make it interacting, where I just talk to you directly about things that really apply to you, right? The good news is that interest rates, based on the trends that we're seeing, they're not going to change, they're going to hold. The other thing is that we're seeing that the overlays are starting to go away now, right? There was overlays too for FHA and conventional. They're gone now. That's amazing, right? And we're also seeing that a lot of your clients are getting appraisal waivers. That's another great thing. We know that jumbo's back now, so you could go and talk to your client, and to your clients who don't have the money down for down payment, you know that the 80/20 is coming back. And you also know that even for the closing costs, you can help them qualify for. So not only the down payment, but the closing costs. You also know what? The bank statement program for your self-employed, the I-10 program for your clients who don't have social security cards. What else can I tell you guys? Or what else do you guys what else do you guys want to chat about a little bit, or you may have a question on?
I would love to hear about your commercial loan program if you do.
I don't do commercial loan, Tina. I wish I did. I don't do that. But we're exchanging information, you and I, and if you want to, I could go look around for something and see if I could find someone that could advise you on that.
Okay, thanks.
Got it.
Cosmo,
Yes.
I just type in the chat box. I'm
Mhm.
asking, if the two buyers, they are holding the title like tenant income, one is only 20%, one is 80%. How do you qualify? How do you use their income? Are you proportion to that too, or you just add the two income together to qualify them?
Right. So your question is, if you have two borrowers and we're basically
They
are using both.
Same property.
Okay, same property.
Two buyers. And they are holding different percentage, like one is 20%, one is 80%. Okay, then how do you use the income? Are you going to do the 20% income on that one that hold the 20% and the 80% of income, that one for the one that 80%?
Got it, Joanna. When you say hold, what do you mean by that? Do you mean hold like one is going to pay 20%, the other one's going to pay a certain percent for down payment?
Like they in the title they are holding like a tenant in common.
Right.
They can say, okay, A is 20% of this property. B is the ownership of 80% of the property, but they are buying together.
Got it. Yeah. So basically, we're just going to look at their income as in a whole, in general. That's what we're going to do.
So it's just A plus B's income, not the 20% of A and 80% of B's income, because their income is different.
Right. So usually when it comes to lending, all we really care about is that if they meet a certain ratio, right? If they're below that ratio. So it depends. Maybe you can't do it, right? If the ratio is not below, for example, FHA ratio on the back end, debt to income, right? When I'm qualifying your clients, I look at their income versus their debt, right? FHA on the back end ratio could go as high as 56%. So that's a little bit more than half of their income versus with their debt, with their monthly revolving debt, right? So that could get a little technical, Joanna. So, but more or less what I'm trying to explain to you is that we're really just making sure that they're within their ratios. That's what we're looking at.
Okay, so you don't proportion the income on two different person.
No, because they're buying. Are you talking? Are they buying as investors, or how are they buying?
They're buying it's owner occupied.
Owner occupied. Then no.
Like a mother and a daughter.
Then no. That should be a simple, as long as they're within the ratios.
Okay, so it doesn't matter how they hold a percentage.
No, that's personal. They want to write a will or something like that. That's their prerogative, right?
Oh, okay. So your loan is separate from the way how they holding the title.
Exactly. I have some clients who want to buy a home in a trust, right?
Yeah.
That could get really complicated. Right? You could ask Mindy.
Okay.
But
Okay.
but I say Mindy because Mindy and I were working on the deal that had to deal with the trust, but we got it done, right, Mindy? Um,
Good.
so that's one. But what else do you guys have? Oh, anything else, Joanna? Did I answer your question?
Yeah. That's what I need to know. Yeah. Thank you.
Okay, my pleasure.
You
Cosmo.
have a question there, Cosmo,
Okay.
from I think it was originally from Frederick. Do you have HELOCs?
Yeah, we have here, like, see right here. Do you speak Spanish? Yes, I speak Spanish. Thank you for asking that. That's a great question. I wish I actually spoke a lot of other languages because I just love cultures. But I don't know the other languages. But hey, as long as we're in there together and we're there and we're showing to the client very clearly, like I'm talking to you guys, right? It's the way I talk to the clients, right? When I talk to your clients, I'm qualifying them. I make it really clear, guys. I'm very transparent. Hey, this is your deal. This is what it could be if you want it to buy the rate down. And in the end of the day, I just give it right back to the client. It's your option, right? I don't make anybody do anything. I don't sell nobody anything, right? I just simply advise them and I consult them and I show them to them. And clients love that, right? Because now they feel like, hey, I understand what I'm doing. I have options. And in the end of the day, if this is not something that I want to commit to, I could walk away from it, right? And so we're really into just making your clients feel very comfortable and being transparent. Once your clients know you're being transparent, but whatever you need to be transparent with, they love you for that. So that's that. And then let's go back to the HELOC. Yeah, we do HELOC. So what is it? Sorry, but go ahead. Does anybody else have a question?
I do,
Uh-huh.
Sylvia. What do you? I know that the IT people, the IT team, sorry,
Uh-huh.
they don't have your traditional FICO scores because they don't have. Some of them don't have credit. What do you have for alternate credit lines of some sort?
Right. So right now, the lenders for the investors, that's what we call them, right? Those are the people that actually do the financing, right? Right now, they want to see a FICO score of 680. Now, if that doesn't work, and I could prove that they have compensating factors, I could prove non-traditional credit. What is non-traditional credit, right? Does anybody know what non-traditional credit is? Anybody want to say something? Okay,
Yes.
so it's a cell phone bill, right? It's you're paying rent. It's a water bill, it's a gas bill. That's called non-traditional credit. Now somebody else said something. You do HELOC for rental properties. Honestly speaking, guys, for something like that, a rental property is really your I mean, if you do a HELOC, right? If I have the money for a HELOC, you could use that money for whatever the heck you want, right? So that's your HELOC. So hopefully that answered your question, because you know that's your own HELOC that you're pulling off of, right? But no, a HELOC doesn't exist that you could match it to a rental property. No, that doesn't happen. Okay, I'm gonna put my information here real quick. And for you guys who are asking questions, it's gonna be hard for me to go back through all of this, right? So do me a favor, send me a text or email me just who you are and your question, and then we'll be in contact from that. But let me go ahead and just put my info here real quick. Okay, there goes my info. Please text me, call me, email me. I take it very personal to make myself available to you guys, right? And then I love chatting with you guys and talking and working with you guys. Let's see what else can I give you. So we already know if you're making an offer, hey, get with your lender, make sure that they see and that they contact the listing agent, especially in this market. That's really important. So okay, I'll say that again. And then let's see what else.
Cosmo,
Go ahead.
yeah, this is Mary again.
Mhm.
I have somebody that will probably purchase FHA. I was just concerned about lender required repairs. I've never done an FHA purchase before. This will be
Okay.
my first. So I was just wondering if the lender says, for example, you have to repair or replace the roof. Now, that's a big ticket item, and that's going to take a while to get a contractor out to do that. So will that hold up the escrow, or can there be a separate escrow account with the funds in there to do that? And can you go ahead and close your escrow?
Exactly. That will hold up the escrow, Mary. So in situations like that, what we want to do is talk to the listing agent, right? And
Okay.
it's funny because I had a scenario like that too, right? Where someone was selling a property. It was in really bad condition. It had a broken window. Actually, the window wasn't even broken. It had an AC, right? You know, you open your window, you place an AC,
Yeah.
and then they put a board right there. And so I'm gonna tell you, long story short, there was little, because I don't want to go on too long about that, right? There were some things that were minor that needed to be repaired. So what happened was, yeah, it held up the escrow, and we just had to be patient. The buyer agent, in this case, you, right? You
Okay.
would basically have to get with I'm sorry, the listing agent had to get with the seller on finding out someone to make those repairs and to make them as soon as possible. So then that goes back to you and I, Mary, just talking as clear as possible before we even go into that situation, right?
Okay.
And also us talking to the listing agent, because in the end of the day, we all want to make the deal work,
Right.
right? And
Right.
so in the case that we had, the repairs that we saw on the property, we knew that there was a possibility, because we're using FHA, we knew there was a possibility that we were going to have to do some fixing on the home. But we knew that they were going to be minor based on what we were visually able to see. And
Right.
what the listing agent and what the buyer agent, all of us got on the call and talked. And this was just a couple months ago. This is during COVID, right? And
Mhm.
so we got on the call, blah, 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 and say, hey, do we want to make this? Okay, great. So when we write the offer, let's not write it for 21 days, right? I mean, that's insane, right? We might get hit with making repairs. They just write a 60-day offer. Happy to say we closed a deal in 40 days because the listing agent was on top of it with the seller, I'm sorry, and they were able to make those repairs, right? The window, the AC coming out, the paint was chipping on the garage, the panels, some of the house had to be repainted because of the bottom coming up, because the property was so old that it had to be plaster again, right? And then there was some wood on the panel that was aging, that was rotting. So for example, a window outside of a garage had a wood panel, and the panel wood was rotting, right? So that had to actually come out. They had to put a new panel there. So that's another thing about how FHA does get strict. So to answer I know I'm sorry, Mary, I know I'm going long here, but
That's
in
okay.
situations like that, we just really just need to be on the same level before we even write up that contract.
I
That's where I'm
understand.
getting at.
Yeah, I understand. Thank you. I did want to ask you, who determines, does FHA have a special inspector, or can the buyer just hire their own home inspector?
Right. So the home inspector is just really going to look at the condition of the property, right? So right, but what we get called up on is the appraisal, right? And those are two different things, right? Between the home inspection and the appraisal. The appraisal is looking at value, right? And
Right.
FHA, because of a lot of it happened because of the crash, right? Of '08. Well, there was a lot of shading stuff happening with lenders and appraisers. And so basically the lender would set their appraiser out there, and they were doing things that were, that were really shady, dropping value, bringing value up whenever they had to. And so now the appraisal has to be a third party. I have no control of the appraisal. Basically, what I'm saying is that we can assign a particular appraiser to that property, right? It's a third party appraiser.
Okay, but what I was asking is, who determines those repairs are needed? I mean, do we have to wait for an FHA appraisal to identify those repairs, or because the buyers are going to be encouraged to get a home inspection, period. So
Right.
where does FHA say identify the repairs? Do they identify them off the appraisal, or do they send an FHA inspector? That's where I'm confused.
Yeah, they send an FHA certified inspector, right? Whoever that inspector may be, right? That appraiser person. They're certified with the FHA. They're on the list basically of FHA appraiser companies, right? That's who they are. And so when they go over there, they have a list basically, right? A checklist that tells them, hey, any chipping paint, any damaging panels, blah, blah, blah. And so what they have to do is they have to go in there and they take pictures, right? And they take pictures and they write reports. And so those pictures and everything of the home gets uploaded, right, to the system. And now it's transparent to everybody, right? To the lender, me, right? And then to the client, and then, anybody else that needs to see that report. So basically they have a list to follow. That's what I'm getting at. I don't know if that's answering your question, but
Yes, it does. Thank you.
Yeah. Only what appraisers see gets called out. Yeah, exactly. Only what the appraiser sees. Now, remember, the appraisers, this is something really important to understand, is that a lot of them are very, okay, this is a thing that drives our industry crazy, right? If you haven't been in a situation, you will be. One appraiser could go in there and say, hey, the property, let's just say that we have a listing property at 500,000. One person could go in there and just say, property comes in at 480 or 490 or whatever. And the other one could go in there and say, property are 430. So appraisal is really just opinion of value. And that's the reason why we are always ready to do what we have to do in order to make the deal work. So let's just say that value comes in lower than expected, then that's when we just start running comps and we start making our argument that, hey, appraisal should be at this place. And then we just shoot it back to the appraisal. And in the end of the day, it's up to the appraiser and the lender, right? The underwriter, really, because I'm not the underwriter, I'm the loan officer, right? In order to come up with the final opinion of value. So as long as you have those comps to support that value, we're good.
So Cosmos, on the lender required repairs on an FHA loan, they have to be made by the seller, correct?
Correct.
Okay, and escrow cannot close until those repairs have been completed, correct?
Correct.
Okay, thank you.
Perfect. Okay. Let's see. Hi, Cosmo. How do you handle ADU on a refi if it's unpermitted? And if it's permitted, does it add value to the appraisal? Yeah, it could. Okay, unpermitted. Right now, they're being really lax with those. So what's good about that is like, say that you go in, right, and you see a bathroom that's unpermitted in the garage. Very common scenario, right? You guys have friends, maybe you do it, or maybe your clients do that, but they have a bathroom in the back, in the kitchen, and what have you. So right now, happy to say that what they're doing is that they're just not giving you no value for that. It's just, hey, it's just a property that it shouldn't be there. Sometimes when they really want to be strict, what were they doing? You had to go back there and tear that down, right? So we're not seeing the tear down happening. They're just not giving you value right now. So if it is permitted, yeah, it adds to the value. So that goes your answer there, Mindy. FHA rate versus conventional loan, average 20% down, no more case. 2.99 for Joanna. That's what you're looking at, 2.99, which is pretty good. Usually FHA rate used to be lower than conventional, right? But because the rates are so low right now, we've seen conventional and FHA, they almost share the same rate right now, which is crazy. But usually FHA and government loans, like VA loans, right, are going to be what? They're going to have a lower rate than conventional loans. So 2.99 for Joanna. 9 appraisers can give 9 values negotiable. Repairs are negotiable. Yep, correct. And it goes back to us just making the deal work, right? What do we have to bring down the value of the property or do we have to, sell the property for more, right? In order for the deal to work. Hi, Cosmo, do you do commercial lending? No, I don't. But send me your information. I could go ahead and look into someone to connect you with. Right. So guys, hopefully throughout this conversation that we had, hopefully you feel like, hey, lending could be really complicated, and it is complicated, right? But in the same way, there's nothing that we can make work, right? We just need to be on the same page, and we just need to understand the scenario. And you see here that the way we're talking about it, hey, this is really possible. One more thing before I answer that question, that has not changed. Okay, this is a COVID overlay that has not gone away. This is here. Before we do a verification of employment, VOE, right? 10 days before closing. Now we have to do a verification of employment 3 days before closing. That's a COVID overlay. How does that affect you? Well, recently I had a deal where a client is a teacher for LA Unified School District. They went on break for 2 weeks. And when it came to closing, we had no one that was there at the office to do the verification of employment. And we were already done. We were at closing, okay? This is done, right? This deal is going to be completely done. We could not close the deal because we had no one at LA Unified School District to verify. Because when they go on break, they don't mess around. They really go on break over there for 2 weeks, if you could believe that. So what did I do? I got with the client, who was a teacher. I just told, look, you got to find a way of calling somebody, emailing some way so that we could get this verified. I'm sorry, but this is a COVID, overlay, and this is not normal. Yes, I understand your frustration, but we just need to find someone in order to make this work. Long story short, she got on that phone, she made it happen. But yeah, guys, that's not fun. That's a COVID overlay. Guess what? It's still here. So just remember that. 3 days after closing, they're gonna do a VOE of verification. If that's not completed, they will not close your deal. Now, the VOE, 3 days, that's a verbal verification. So they literally just have to have someone there that could just say on the phone, yes, John works here. That's all we need. We don't need no facts. We don't need no other documentation. So that's just a story I want to share with you guys. And that's still very much around right now. So please remember that. Average day funding, we could fund a loan in 14 days. Let's see what else. Is FHA, can they pay the MI upfront as due for VA? Now, that's a good question. I really don't see anybody paying the MI upfront, because the MI is factored into the loan, right? But if they wanted to pay it, yeah, they could pay it. But I mean, at that point, I would just say, hey, if it's not necessary, don't do it. That's my personal opinion. Let's see what else. And the other thing too to know about VA is VA, if we could prove that. So for Jim, and this is common actually, for VA, if we could prove that the borrower has some type of disability or some type of reimbursement from the military, they waive that VA funding fee. And I've done it several times. I've been able to get it waived. So remember that. All right, we're coming up close here. Is there any, you guys got my information? I'm gonna keep it short and sweet here. This was, believe me, I know, this wasn't your average lending presentation. Again, I didn't want to bore you guys, right? With all kinds of crazy numbers or what have you. I just wanted to have a simple conversation, a real life conversation that if you literally just called me on the phone right now, the way that I will talk to you personally is the way that I wanted to talk to you right now. So thank you so much for your patience. Thank you for participating. You have my information. Do me a favor, reach out to me. I'd love to connect with you guys. Even if you don't have a scenario right now, just say hi and just say that you were on this call, and we'll keep in contact. Thank you, everyone. I appreciate it.
Thank you, Cosmo. Thank you for your presentation. Does anyone have any more questions for Cosmo?
Thank you very much.
Cosmo, I do have a question. What is your best suggestion for if we do the selling agent, helping buyer, and what do we need to tell them how to prepare or get a successful loan approval and go through?
Right. So basically all the simple things that you guys know, right? Which is what? Keep your revolving debt down low. If you have collections on your credit report that you're aware of, how much are those collections, right? So that's when it starts getting really technical. For example, if they have a collection, it's $2,000, they don't even need to pay it. If it's over $2,000, they actually have to pay it. So that's another technical thing right there, right? Let's see what else. So that's when, I will call them. Basically, I will call them and I will talk to them. Hey, how's your FICO score looking? What's your monthly revolving debt? And they tell me I have a card payment, what have you, student loan. Then I start factoring that in, right? Okay, so that, and then it also depends on what loan program are they going to veer towards, right? Are we looking to put them in an FHA or a conventional? If they are doing those two different loans, well, they got to prepare two different ways. If they're going to do a bank statement program, they got to prepare differently for a bank statement program, right? If they're going to do a jumbo program, they got to prepare differently. VA program, same thing. So that's pretty much it. Just, keeping your revolving debt low. If you have collections, pay them off. But if your collection is less than 2,000, don't pay it off. Hey, keep $2,000 in your pocket and use that to buy a refrigerator or a couch or something like that you may need, right? So that's it.
Cosmo, one more question, please.
Go ahead, Mary.
Yeah, when for the agents representing buyers, to kind of let's see, we're not going to pre-qualify them, but just to kind of see if they're even in the ballpark. Is there a rule of thumb, like formula that you should say income versus price of property? Is there a ratio that we should use to kind of as a guide?
Okay, Mary, I'm gonna be really honest with you, right? A lot of the realtors that I work with, they that I've been working with for years, right? They have been working with me so much that when they talk with some people, they already know not to even give me that person's number to call, right? Because they know that that's just not going to happen, right?
Okay.
That's just not going to happen.
Okay.
For example, somebody makes $12 an hour, right? And and they they live in Alhambra and they want to buy a house in Alhambra, and they recently just came out of a bankruptcy. My realtor is gonna not even mention that person to me, right? Like,
right.
They're just gonna keep that to themselves.
Right.
Now, what I tell people is this: in all scenarios, to be safe, you talk to them. It's part of building rapport, right? Which is awesome, though, right? Which is great, and I want you to do it, Mary. Basically, hey, John. So, what type of work do you do? Oh, you're an engineer. Awesome. How long you been doing that for? Oh, 5 years. Okay, great. And so, John, more or less, whatever you're looking to buy in, Alhambra. Okay, I know the homes over there are about 800,000. They're really beautiful. Awesome. And John, how's your credit? What will you estimate your FICO score to be? Oh, it's around blah blah blah, this and that. Okay, cool. And then I will do that for you, Mary, right? And then you call me up and you're like, Cosmo, here's the information. Now, the reason why I'm telling you, be very careful with that. This is what I want you to be careful. This is the point that I'm making, is that you may think based on what you're talking to a client, right? They tell you they had a bankruptcy that they do not qualify. That's not always true. And let's not risk that, right? Let me determine that, right? Let me look at all the other programs to make the deal work. So that's the point that I'm getting at. But I love the idea of you getting in there with the technicality of what I do, right? Which is what? Qualifying them. And then that's going to help you build rapport as well. Go ahead.
I just want to pre-screen them. And you make a lot of excellent points, but I wanted to kind of focus on the income ratio to selling price. For example, somebody that wants to buy a $500,000 or $600,000 property, what kind of income do they need to come in with? Do you
$70,000 to $80,000 a year?
I'm sorry, say that again.
$70,000 or $80,000 a year they got to make, right? Around there, around that threshold to qualify for. So somebody comes to you, right, Mary? They tell you, Mary, I make $70,000 a year. Boom, you already know they're in the $500,000 range, right? But remember, Mary, it's not that simple though, because some people want to put down the very minimum, but some people want to put down the 15 or 10%. Now, the very minimum, they make $70,000 a year, they could qualify for a $500,000 property, putting down how much? 3.5% down. But you see how that would change if they were going to put more? Now they qualify for more, right? They're putting 5% down or 10% down, right?
Terrific. Yeah. Yeah. And do you look at annual income or net income?
We look at the gross income. So gross income is before the government comes and takes all their taxes away, right? And I'm sorry, before the government comes and they tax you that 30% for some of our W-2 clients, right? Which is great. So we look at it before it gets taxed.
Okay. Thank you.
Okay, awesome. All right, I think I'm all done, guys. Please reach out to me again. Thank you for your questions.
Thank you,
And I think it's
Cosmo.
time to end the
Cosmo,
right.
Cosmo,
Uh-huh.
what is your quick calculation based on the income? Like you say, 500,000 or no, like 70,000, they are qualified for 500,000 house. You have a quick, just like divided by their
Formula?
annual income, like divided by 3, or yeah, quick formula you can use in brain instead of calculating. Like if I give you, this is my annual income, then quickly you can say, well, this is how much you might be qualified for. You have a
Right.
quick formula. Like
So the
divided by,
formula that I use is a ratio of 56% back end, right? But that could change because maybe this client's not gonna do FHA, but they're gonna do conventional. And really, Joanna, I know those numbers because I just been doing it, right? I just been doing it. And I
yeah,
know that and let me go back to that to even make it more complicated for Joanna and Mary. Well, how about if they got revolving debt, then even if they make $70,000 a year, they're not going to qualify for a $500,000 home if they have car payments that are a total of $1,000 a month.
yeah, I understand that. I mean, just a rough idea, if they say, oh, this is how much I make, then we can tell them, well, I think if you have no other debt and then you have good credit, and this is how much you might be able to qualify.
Right. So I don't have a method or formula for that. I just have numbers in my head, really, right? But I'm going off, the method is basically going off of either 45% back-end ratio, right? Or a 56%
Okay.
FHA if all things are allowable, right? If we're going to go FHA for those scenarios. So
it's almost half.
yep, half of the income.
Mhm.
Exactly. Yep.
Yeah. Okay, good enough.
Thank you so much, Cosmo. I know we're coming to a closing. We have only a couple minutes more. Thank you so much, and thank you everyone for joining us. Please join us every month, the third Tuesday of each month. Thanks again, and pass the word around so that we can have a bigger audience each and every time. Thanks.
Thank you, everyone. I appreciate it.
Thank you.
Thank you.
Thank you, Cosmo and Sylvia, for this wonderful section. We definitely will have a great start for 2021. On behalf of West and Gable Valley Realtors, we would like to thank Mr. Cosmo Sanchez, New M Funding, for this informative presentation. Please contact him directly if you have any further questions. And I repeat, his cellular phone is 626-497-9002, and email is a Cosmo, COSMO @newmfunding, NEWAIMFUNDING.com, and hopefully you can get direct consult for your any information queries regarding the lending. Cosmo know a lot, so Cosmo definitely can help you for your further questions. A quick reminder, we hope to see you next Tuesday, January 26th at 10 a.m. This is a very important class. We invite you, everyone, join the class, Eviction Moratorium Update by Attorney Dennis Block. And February 2nd, Tuesday, also at 10 a.m., Feng Shui Master Alex Z gonna to come to update the 2021 pandemic Feng Shui setting. And we have many good classes, upcoming classes provide for you. Please do register online at wsgvar.com and click the menu, drop-down menu, education, and click the classes. And so you can register all the upcoming classes. Let's join together and learn. I want to thank again Cosmo, Sylvia, Fong, and all of you again. And we wish you having a successful 2021. See you next Tuesday, 10 o'clock. Thank you.